Welcome to Tradiers, the Trader's Edge. I'm Jim Uriel. That's Bob Iacino. Thank you guys for joining us live. We appreciate it. Bobby and I have had such success on trying to create platforms like this, and it's because of you guys. Thanks for the DMs, the retweets. You guys are the best. Bobby, how are you?
Good, man. How are you? You feeling better?
Yeah, you know what's so funny? And this is going to just go to the Dago part. Like even today, I was feeling kind of crappy and I'm starting to feel better. But I just went in before the show and I didn't like the way I looked. So I put some gel in my hair. And what is it about gel that can make a Dago just feel better right away?
It's just, you need more grease. When you're sick, you don't have enough olive oil coming out of your pores. So you just need more grease. That's how we are.
And that's just another avenue for grease. Was the
grease it up a little bit.
Yeah, so now I'm feeling fine. Okay, today was a day where equity markets just keep flirting with that highs. Haven't been able to push through it yet. Do you think this is going to be a periscope move where we jump above it, boom, and then go down a little bit before we try to test it again? Thoughts?
I think we're really going to have sort of lowered volatility in anticipation of higher volatility because, first of all, I mean, obviously we got the holiday shortened markets. I don't even know how many people are going to listen to us today, being that so close to Thanksgiving with just a shortened session on Friday. So I really do think we had a data dump today that was a yawn. I mean, there was really nothing. It was mixed. No matter which way you sort of toss the data in the air, came back with some better, some worse, some better, some worse. And we got the probability of the Fed's 25 basis point rate cut back up over 60%. It got as low as 52% on a settlement basis with the CME Fed Watch tool. So I just have this idea that it's going to be quiet, but it's more of volatility compression before expansion. Not sure when that expansion is going to happen, but I have faith in the Santa Claus rally, and then January 20th, kind of all bets are off.
Yeah, so tell me this, though. What is, from a technical standpoint, what is the level we must eclipse or get to before you think it's green light above?
Well, I do think like medium term, it's green light. Like I don't want to give the impression that I'm bullish. It's more to me about sideways. But I am looking at a specific level, and I'm pulling up my chart, stalling to act like I have it off the top of my head on the S&P futures, right?
Yes.
No, let's go to Dave. Dave, the lightning round. It's 6,012.50 on January futures. So
one thing
as soon as we can, we're basically testing that with the futures session. You know, we're still open a few minutes later than the cash session. And if we bounce from there on Friday and then continue that on Monday, it's new highs until the end of the December, in my view.
I like it. One thing, it's so funny. Both of us had 20-year media careers. And one thing is you have to kind of talk like you know everything, and you learn how to do these little tricks, and by the way, I'm not saying we know nothing, and you guys might think we know nothing or we know something too. But as I've said a million times before, you cannot argue that being in the media for so long has given us some great connections that we get outstanding guests. Today is actually a guy who does know something. So I hope we can all learn, including us. He is Senior Portfolio Manager and Equity Strategist at Federated Hermes. He is Steve Cheverone. Let's bring him in. Do you have grease in your hair right now, Steve?
I'm all natural, guys. I don't put anything in. This is it's just trained to go this way. This is how I wake up, you know.
Fantastic. Okay, before we go, tell us, where are you located? New York?
I'm in New Jersey, so I'm right outside of Princeton in Lawrence, New Jersey.
Grew up. Do you have an office in the city or no?
Yeah, we're in Park Avenue. So I've been doing that commute for 20 years.
Wow. Married, children, the full everything.
Yeah, hopefully you won't see them. So everybody's off.
Hopefully we will.
You never know, they might pop in. So I've got a wife, 3 kids. She tricked me today. She asked me if I wanted to go on a date, and she took me to the gym for 3 hours this morning. So you're like
my kind of wife.
Walking. There was a lot of pickleball involved, Bob. I see your face there. It wasn't.
I want to point something out about this particular crew that's on your screen right now. Jimmy normally has a black T-shirt on. 3 of us with vowels at the end of our names. We've got naturally greasy complexions in hair, which keeps us young, right? I mean, we don't have to moisturize. It just comes out in the morning. I could put my face to a pan and cook eggs. And we all usually have dark to black shirts on. And we all look younger than we are. So I just want to point that out.
And I have a gray shirt on, and it's like, it's just not the same.
Well, it's hard for me because people, I don't want them to just see my looks and, not think that there's anything
amen.
behind it. So,
That is so true.
it's really hard being this good looking.
Outstanding.
Preach, baby. Where'd you go to school?
So, New Jersey kid. Went to Princeton Day here in Princeton as a kid, and then went to Drew University. Former Governor Tom Kean was the president, so I got to help him out back when he was writing the 9/11 report, which was it dates me a little bit. And then went right to work. Before I even graduated, I started on the street my last semester in college.
By the way, when you say it dates you a little bit, Bobby and I take that as a direct insult, considering we're both a minimum of 15 to 20 years older than you are.
It was half part humble brag, half part.
It was definitely a humble brag. Okay, let's start. Let's start with some serious talk, because as I said before, I was not that aware of it, but apparently there was an election a couple of weeks ago that the implications of it, this is kind of an inside joke, because I say that all the time and it's not funny, but like it's gotten to a point with Bobby and I where he's just like, oh, so
It happened.
It happened. So anyway, it has implications on many things. I want to start first with trade. I have been of the opinion that Donald Trump is not any sort of big fan of tariffs. He wants to use them as a club to knock people into place. And but one of the things I based it on is him going on live TV and saying, I love tariffs. It's my favorite word. That's exactly it. Yeah. So do you share that opinion? And what do you think the implications are going to be for that?
I've been talking about this a lot. And, let's start here, right? If you're a classically trained finance person, if you're an economist, or you're in this business, right? When you're in Econ 101, you learn that taxes, tariffs, anything that messes up the supply demand curves are bad, and generally they are. I think what the Trump folks are up to, though, is much more nuanced. There's two kind of classifications of tariffs here. There's the ones that they want to do on China, and they're going to do those. That's not a tariff unless you do X. That's you are a strategic competitor of the United States. We think you're not very friendly, and we're going to hurt you with tariffs. And so I think those are going to happen, and you should just expect those and move on. It's kind of like when you're eating your Thanksgiving plate. If someone puts Brussels sprouts, put them aside, keep eating, move on. The rest of them, though, I think their view of the world, and it's not, in many cases, not wrong, is that between 1975 and 2000, real wages went flat while corporate profits went up. And the reason for that is you got global communications, advances in supply chains, an energy renaissance in the US, and companies for the first time could produce overseas, ship back, and they sent all the jobs out, right? And when they did that, it devastated the industrial Midwest. I don't mean like it just hurt their economies. I mean, towns were devastated, families were devastated. You got an opioid epidemic that occurred after that. And I think they asked the question, was it worth it? And you can come down to either side of that, but that's a fair question. Today, they see robotics, they see AI, they see automation as an opportunity for companies to produce in a high labor cost country again. You can do it because you need less labor to produce the same goods. The problem that they face, though, is if a company is going to leave China because they didn't like what happened during the pandemic, or there's supply chain disruptions, or the things that are going on in the Indian Ocean, it still might make more sense for them to go to Mexico, because you still are close, you still have easy shipping, you can still recruit top American talent, it's tariff-free. So they look at an auto manufacturer and say, look, you're selling a $35,000 car in the United States. We want you to make it in Alabama, not Mexico. So here's what we're going to do. If you choose to make it in Mexico, we're going to hit you with a 100% tariff. Good luck selling your Corolla at 70 grand. And those companies can't not sell in the United States. And so the hope there is that in this once in a generational technology shift, companies leave China and they come back to Alabama, and you rebuild this industrial center. It might work, it might not, but it's not crazy.
So let me ask you about like the overall tariff view. I've been bringing this up a lot lately, and pretty soon I'm not going to give him credit anymore. But our friend James Fishback, friend of Gemini's, friend of the show, said about Trump, take him seriously, but not literally.
Yeah.
And I think that's one of the best ways to describe some of this tariff talk right now. The legacy media, which Jim and I both used to be a part of and both currently despise, is now talking about the 25% tariffs on Mexico and Canada that have been threatened, right?
Yeah.
But they seem to forget Actually, let me just ask you about that first. What do you think, if any, damage can come from those kinds of tariffs? Do those fall into those same sort of, I don't call them empty threats, more negotiating ploys?
Yeah, so I don't think they're going to happen. I mean, I think if you look at what happened yesterday, Trump got exactly what he wanted, right? He threw those out there and he said, look, it's 25% unless. And what he understands, rightly or wrongly, is that the United States is the buyer of the world. We are the consumer of the world. That's why we have the trade deficit we do. Well, if the customer is always right, we're the customer. And so it's, he got a call from Canada and he got Mexico announcing that they were going to stop the caravan. And that's what I think that was really about. The caravan was coming. He didn't want to have a caravan on day one and have to deal with that while he's trying to get other things in place. And so he said, look, stop it or else. My guess is those tariffs never actually happen.
So on top of that, though, one of the things, I have a friend who works for a subsidiary of an American car maker, and he called me up very worried about this. Mm-hmm. And one of the things I told him was that a lot of the sort of cross-border stuff, because I was watching, I'm not going to say who it was, basically saying that you could end up with auto parts that have a 75 to 100% tariff on it because it goes from Mexico to the US, then up to Canada, then back. Take the example of, say, an engine block, which might be milled in Mexico because the raw materials are there, sent to the US to be precision sanded and drilled for extra components. Maybe some more components are put into it. Then it's sent up to Canada to become a bigger part of a powertrain. But that particular thing, it's called an integrated, a cross-border collaboration, is exempt in the USMCA. And so my friend said, I thought Biden canceled that. I didn't even know. He didn't. Not only did he not cancel that, he's been working to implement the different parts of the USMCA. Why do you think the public thinks that this particular administration is just so blind with rage that they would just put tariffs on and not consider situations like that?
I don't think they do. Remember, they elected him, right? Perfect. So, I mean, it's the biggest electoral college win for Republicans since George H.W. Bush in '88. It's only the second time in a generation that a Republicans won the popular vote. So, and I think that's the point. Remember, not only did he get elected, but the market rallied in advance of that election. If you looked at how the market was moving, it was moving almost with the betting odds. So I don't think it is. And I think the market's the same way. You got that tariff threat at 25%. What did the market do yesterday? It was fine. What did bonds do yesterday? They were fine, right? I think one of the things we might be surprised by is that because everybody knows his negotiating tact now, he's going to have to follow through a couple of times. He's going to find, I think, a couple of sacrificial lambs early where he really does hit them with the threat. And because he's got to reestablish, the threat only works if you believe someone's going to follow through on it, right? Like when I threaten my children, they don't believe me. They know. Now, if my wife threatens them, they listen, right? They understand that mom's the tough one. And so I think you may see him actually have to follow through on some early in order to try to get companies to actually change that behavior. So you might have a negative surprise here. Again, this is just a guess, but you might get a negative surprise in the early days of the administration where he follows through on something that we think he wouldn't, so that he establishes that kind of deterrent, and then hopefully other companies just do what he wants. So that's one thing that could cause a little bit of volatility in the early part of the year. I think it's important just not to overreact.
So what you're saying is kind of what Bobby says, is the markets don't take Trump literally all the time, but there's a chance that they might if he flexes muscles. But I'll get back to China real quick too, because I just was writing a piece about China and copper demand. And Bobby, for the near term, I've kind of flipped on copper, and I'll tell you why. Because my thesis is this: is Trump really would love to damage the Chinese economy. The Chinese economy was a huge consumer of copper even before they started to consume 60% of the world's electric vehicle sales, which have an average of 200 pounds of copper per. So I'm writing up a piece right now about how copper might not be the right play within the industrial metals right now. But my question to you is, he is going to follow through in China. You've already established that. What are the ramifications of that? Does it damage the Chinese economy?
So I think the Chinese economy is in a lot of trouble to begin with. So I wrote about this 5 or 6 years ago. Look, if you think about what economic growth is, right? If you really think about what it is over the long run, it's do you have babies and do you make new things? It's population growth and innovation. Those are the only two things that really drive it. You've got Europe's working age population shrinking 10% over the next 20 years. That number's 20% in China. So that's twice a Roman decimation. And it's 30% in Japan. So they never have to worry about their government debt because no one's going to be alive to pay it. The United States doesn't have that, right? We've got 8 to 10% working age population growth. And when you're the size that we are, 300 million people, you don't need that much immigration to have population growth. When you're China and you're 2 billion people, you need India to move in. And, most people don't wake up on a random Saturday in bed with their, wife or husband and say, hey, let's go move to an authoritarian regime. Sounds like a lot of fun. And so they're in this kind of population decline that they can't fix, right? They've moved people off of farms where you have 8 children, even though you'd only claimed 1, but you have 8 children per couple in cities where, kids on a farm are an income producing asset. In a city, they're an expense. I love my 3 children. They haven't made me a dime yet. Tomorrow's better.
I got some news for you about the future of having those children too. But anyway, just keep talking.
Well, and I think the second part of it is as well, right? No one in the history of Ferraris ever stole a Yugo. So if they had the technical advantage, the technological advantage, they wouldn't be stealing our technology, right? We have it. The Mag 7 are 7 magnificent American companies. So that's a challenge for them to begin with. And the only way that they can really overcome that is theft of intellectual property. And that really ended when Trump came down the elevator 8 years ago, because that really changed the way both parties thought about it. And Biden was as tough on that, as Trump was. So I think they're going to be challenged. They'll try to fire some stimulus bazookas. It might help in the short run, but I think the long-term trend for China looks a lot like what it's been for Japan.
By the way, a huge takeaway for me is going to be, if you were huge innovators, you wouldn't be so in the market of stealing technology. And I appreciate that. And that's brilliant. I live in Motorola country out here. So I have tons of friends who are Motorola engineers. And one thing they always told me is that when they were going to China to visit plants and stuff, you were not allowed to even leave your phone in the hotel room. You couldn't leave it because the maids were trained to take that technology and get it cloned real quick before you got back. To me, that just blew me away, but it was a Motorola policy. But anyway, so if China's potentially on the decline and we're potentially on the upswing, that's what I think I heard, right?
Yeah.
So what in this country, what do you think are the interesting places to be? Is it banks for that reason or what?
It's the old economy. So if you really think about it, if China's no longer the great emerging market, what is? Well, the greatest emerging market in the world is the center of the United States, right? You have easy shipping routes to the east and west coasts. You have so much energy that for years when we drilled for oil and natural gas came out of the ground, we set it on fire.
Right.
One of the lowest corporate tax rates in the world, more land than we can fill with people. Don't believe me? We'll go to Tulsa. I'll show you. We have an educated population. We have wonderful bourbon and amber waves of grain, right? And so if you think about that, right, that center of the United States, if you're going to have companies come back, well, who's going to finance the production? It's going to be banks, and it's generally going to be regional banks and smaller, mid-sized regional banks. And who's going to produce it? It's going to be local companies using local resources. So, you were talking about copper, and for years and years and years, right, China's been the marginal buyer of copper. I think that's about to change. Right? I think that becomes a U.S. play. So our view is it's that old economy. It's industrials, it's materials, it's utilities, it's construction around that, it's financials. I think that's the kind of broadening out that we're starting to see, and I think that's the big kind of not 6-month play, but the next 5 or 10 year play in the U.S.
So Jim and I get accused all the time of being Trumpers, and neither one of us are. As a matter of fact, this is the first time I voted for him in the 3 times that he's run. I'm not saying I voted for a Democrat. I voted Libertarian just because I didn't like either candidate. So how can you be a Trumper when there's 3 elections and you've only done it this time? But this is the first time that I feel encouraged. So to your point, when you talk about the center of the country and you talk about copper being the play, it sounds to me like you believe in reshoring.
Yeah.
as a part and parcel to not necessarily to just taking the supply chain away from China, but bringing it back to the US via AI and other technological advancements. Is that what you're saying?
Yeah. So it's funny. We wrote about this 7 or 8 years ago, and it was crazy. In fact, I won't mention it by name, but there was a big bear on the street. He used to have a newsletter, and he called me a functioning moron for this idea. So I sent him a little note, and I thanked him for at least including the word functioning. I thought at least that was a start. And then every 1,000 points on the S&P, I would send him a cake. Because I think we made that call at 3,000. So he got 3 cakes or whatever it was. But
come on, say his name. Was it Peter?
I'm not gonna do it. I'm not gonna. My mother raised me better than that.
Okay.
But she's watching, so I don't want to my mama, But to your point, yes, and I think not only is that a market theme, and not only is it an economic theme, but it's a political theme as well, because we've got a debt to GDP problem, and it's important that you say it that way. It's not just a debt problem; it's a debt to GDP problem. So the problem when you're trying to solve that is a lot of times when you cut spending or you raise taxes, it will hurt GDP more than it hurts the debt level, or more than it lowers the debt level. So you've got to grow faster than your debt grows. Well, one way of really doing that is getting economic activity and production back on U.S. shores. If you do that, and you can start to get the fiscal deficit down to kind of a little bit below 3%, and you can start growing at 3%, all of a sudden a lot of fiscal problems go away. And I think that's imperative for us. So, lowering the corporate tax rate was a good start. I think some of the infrastructure spending in the last administration, once it kind of gets in place, at least the true infrastructure spending, will also help. And if tariffs are successful in forcing companies back in the United States, or encouraging them to come, more I want to use the word voluminously, but it's the only one that's coming to mind, more frequently, then I think you have a fighting shot at getting there, and that would be very good for our economy.
All right. So sort of a follow-up and a half. So we have this red wave, right? So we have reshoring, we have Fed rate cuts, we have strong corporate profits, right? The potential for even further corporate tax cuts, along with individual tax cuts. But we also have DOGE, right? The Department of Government Efficiency. Of the 16 million jobs that the Biden administration touts having created out of thin air, 12 million of those are government jobs over that period of time. Mm-hmm. If DOGE has, 250 days? Or no, somewhere around 500 days to make these huge cuts. And if they're too aggressive, am I wrong in thinking that there may actually be a stock market corrective dip that will be a multi-decade buy? Because that's what I've been touting right now. I'm saying that there may be some bumps in the road because this sort of is austerity, right?
Well, yes and no, right? The question is what are you cutting? Are you cutting things that are unproductive? Mm-hmm. And remember, we've been in a labor shortage in the United States for, since the pandemic. So theoretically, these government workers are skilled enough that they could find work in the private sector.
What are you basing?
I know it's general. There's some job, guys. What's the line from Caddyshack? The world needs ditch diggers too. But there's some job for which theoretically they're qualified. So one, you can get a little bit more labor supply. The other one is look at the 90s, and I didn't realize this had happened, but under Clinton, he had Al Gore go on a firing spree in the federal government in 1992. We actually fired about 600,000 federal workers. We went from about 2.3 federal employees to about 1.5. So I guess it's closer to 700,000. And that was in a period where unemployment went down. What I would say to you is this: if you did get a major sell-off, and that sell-off was about taking short-term pain, right? So maybe you're following through on some tariffs and they sting a little bit. Maybe you're firing some people from the federal government, unemployment's going up a little bit, and they haven't yet been reabsorbed into the economy where they can, go on to something that's more productive. I think if you were to see short-term pain that was in service of structural improvements in the way that the government and the economy are working, yeah, you want to buy that with both hands. Every day, twice on Sunday, you want to buy that. I don't know, however, that the market would look at a reduction in the federal workforce and decide to sell stocks. I think it might be the opposite.
Take a quick 30-second break here. One thing first, Steve, tell people where they can find you because your stuff is amazing.
So you can find me. I'm on LinkedIn. I'm on Twitter, or I guess it's X now. And then federatedhermes.com. We do all of our kind of commentaries and post them to the web.
Perfectly. And secondarily, if you guys are watching right now, Tradier is running special. You can have a free trial period of Tradier Pro, which if you're an options guy at all, Tradier Pro is a necessity. Heard from some of my top options people who talk about it. You can get a free trial. Please give it a shot. It's a way of supporting the show as well. I think there's a link. I'm never actually sure when someone says, tell them about the link. There's something that means, but I don't know. I'm not a technology guy. But anyway, back to the show. Bobby.
Yeah. So of the things that I mentioned, Steve, the red wave obviously makes the first 2 years easier. Reshoring, Fed cuts, corporate profits, corporate tax cuts, deregulation. Which one is most at risk? I would go with Fed cuts.
Yeah. So I think, right, the pain trade, if you want to have a pain trade, where are most people off sides next year? It would be on an economy that's hotter and inflation that's higher and a federal funds rate that after they're done cutting still has a 4 number on it. That's not our view. But by the way, that's not our view. Our view is that this Fed is, look, Jerome Powell was the guy who said it was transitory and everybody kind of laughed at him. And then while it took longer, it really did heal on the supply side. We didn't take a lot of demand hits in order to get there. And then he said in 23, we weren't going to have a recession. And even his own staff disagreed with him. And he was right. And so he's feeling pretty good about himself. Now, whether he should or not, another story, right? 2021, maybe we got to pay for that sin at some point. But I think he's looking at this and saying, I can stick this landing. And if I do, I'm better than Greenspan. And so, okay, everybody's telling me, be overly worried about inflation, don't cut. And he's done over the last 3 months what I do in my house with the thermostat, which is everyone in the house gets an opinion, but nobody touches it except for me. In fact, it's one of these fancy ones that when my wife touches it, it automatically goes back to where I want it to be, and I don't even know how it does it. But it makes her mad as hell. But the point is the committee didn't really want to cut 50. He did, so we cut 50 in September. And the committee wasn't sure about cutting in November, and he wanted to, and so we cut in November. And I think he's going to try to get to neutral. He wants to get to neutral so he can stick this landing. And so what is neutral? We think it's between 3 and 3.5%. I think he probably does the cut in December. You had both Goolsbee and Kashkari both say more or less that they were in favor of a cut over the last couple of days. So I think that the December cut happens. I think he slows down to once a quarter next year. So you'll get 4 25 basis point cuts. And then the question is what happens in 26? Do they do the 2 in the dots in 26 or do they stop at 3.5? That's our base case. We think that's their plan. In the words of the great philosopher, Mike Tyson, everyone's got a plan until they get punched in the face.
We use that all the
time.
Yep.
Yeah. That no, it's just Bobby. You got something? Oh, you was going to read.
Yeah,
Steve.
I had to have ask Luis to put this up. Steve, I literally once every 6 months. You ever see that YouTube video where
Yep.
it's just Trump saying China a million times? Just
Yep.
China, 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 China. I play that once every 2-3 months.
Oh, you're pretty
I
good
did
at
have
that.
a question though.
Yeah, I just he's capable, but he's also a character. It's like a joy. I remember watching him during his first term and thinking to myself, things are going really well as a strategist. I'm seeing things very clearly. He's saying things are happening. Unemployment's falling. Stocks are doing well. Commodities are catching a bit, especially the ones I'm long. Crude oil's coming lower. Production is up. And he's saying China. And it just was like, made me so happy.
Hey, I don't sound like most of the people that do my job. So I have
Or most of the people that live where you live. Go ahead, Jimmy.
well, yeah.
So no, you mentioned that you think Powell's going to cut further, and I'm in the same camp. I think he's going to cut less than I thought he previously was. But the question that should be in everyone's mind is why? Does he really think that there is impending economic collapse on the horizon? Does he think that it's government debt service? What do you think?
I think it's a couple of things. I think one, he had to be restrictive when inflation was 9%. I think
he had to be restrictive in June of 2021.
Well,
inflation was at
we were
5%. And I know you know it, right?
Yeah, but yes, he did. But then he needed to get there. I think I think if you were to get hit, a couple of bourbons in him, I don't know if he's a bourbon drinker, but I think if you got a couple of bourbons in him in a quiet moment, he'd probably tell you that their target really is 2.5. You can't say that when it's at 2.5. It has to be 1.5 to say that. Yeah. And so I think that they're about where they want to be on inflation right now. They maybe want it a little bit lower, but you're in the neighborhood of that. And so, having a Fed funds rate 200 basis points over the inflation rate is probably restrictive. So he wants to kind of neutralize. I also think, we got away with one with small businesses. If we were going to have a recession in 23, it was going to be these higher rates really pressuring small businesses that have floating rate bank debt. And what got them through it, for better or worse, is they were tapping pandemic era stimulus programs, right? Remember that deal where if you didn't fire somebody during the pandemic, they gave you free money?
Yep.
I think they gave out like 400 or 500 billion of that this year. That program didn't close until January of this year. So you had these small businesses that otherwise would have been under a lot of pressure on the debt service side, that they were able to tap these grants, and it got them through. Well, those grants don't exist anymore. So if you keep these borrowing rates higher, at some point they come under pressure. So I think his view is not that there's a major problem, but my goodness, if I can get my rear end in gear, I go from, being a potential disaster to out maestroing the maestro. And I think, remember, this is the guy that did the Vanity Fair, cover.
Oh, I remember.
Suit jacket. He really wants to nail that. And, God bless him. I hope he does.
So here, my follow-up question real quick is that, so I just did a thing with Ninja Traders today. And we were talking about the Russell and its outperformance. And I said, 3 times more likely to use floating rate debt. So they care about interest rates going lower. But interest rates haven't really gone lower over the last 6 months. So why are they continuing to rally? I mean, short end obviously has what's been controlled. But the question I was going to ask is, does it just as simple as small business tends to be politically motivated? You can see it, small business optimism. When they believe that an administration has their back, they tend to do better. Is that part of it?
That works for the pizza shop down the street and the mechanic, but not the Russell 2. I think the biggest story that's going on in the market right now, the biggest story is what's happening in the yield curve, right? You've got a steepening of the yield curve. Go back to 2022. The 10-year went up. When it went up, what happened? Tech got its rear end handed to it because it's a long duration equity asset. You buy a tech company for earnings over the next 10 years. When short rates started to go up last year, then you saw the dividend payers, you saw the cyclicals, and you saw the small caps really start to come under pressure on a relative basis. Today, I think that's what's happening. The 2-year is set to go down to 3 to 3.5. We think the 10-year is going to stay right at about 4.5. You need a term premium when you've got $36 trillion in debt. You just do. That's how you clear that. And so anybody that's funding short, anybody that has floating rate bank debt that's based on SOFR, not a 10-year fixed rate or an 8-year fixed rate corporate bond, that's where all the relief is coming. So if you look at those small caps, you've got lower rates, you've got a steeper yield curve. You also have an earnings change, right? These companies saw their earnings shrink 16% this year. They're set to grow 41 next year. Mag 7 is going the other way from 50 to 20. So I think there's a lot in favor of these small caps. I'll tell you, in our multi-asset group and at a firm-wide asset allocation level, our biggest active risk is overweight small, and we got a lot of conviction in it.
So I got a question or it's more of a comment from the Barricane. I really like that handle, by the way, being in Southwest Florida. It says, if they could focus on the supply side of practically everything, it could increase demand without a spike in inflation, and then hopefully lower the interest rates because the interest on the national debt is insanely expensive. Either one of you comments. We'll start with Steve.
Yes. And that's what the whole reshoring thing is all about, right? If you increase domestic supply, you increase economic activity at home, you get more foreign direct investment. Same thing with DOGE, right? Government spending that's productive is okay, because by definition, that means that it's generating more growth than the expense behind it. If it's unproductive, that's how you get in the situation we have. And if history tells you anything, you've got to grow out of a debt problem. That's the only way out. Ask any company or any country that's ever accepted IMF money, and they'll tell you that. And so I think that's right. You've got to increase economic activity and production in the United States. I think we're starting to do that, by the way. The percentage of GDP right now that's being driven by the construction of manufacturing facilities is the highest it's been in 40 years already. So I think that's starting to happen. I think this manufacturing renaissance is starting to happen. But that quote, I think, is spot on.
Jimmy, do you still think that part of the just absolute commitment to cutting rates is because of the cost of the national debt?
I think so. Yes, but I'm not sure it's got the result that he wanted because the financing issue. I think one thing I would say to counter Steve, but I want to comment on that real quick too. You said you think the 10-year is going to stay around here, but if they exhaust all the financing, not all of it, but most of the financing available on the short end, and they have to start issuing, $1.4 trillion debt service coming due in 2025. If they start issuing too many bonds, I used to be more worried about this a month ago because I thought people were going to step back and say, this bullshit, I'm not buying your debt at 4.5% if you're going to be selling, another trillion bonds coming down the pipe. Do you see a situation where that he could be cutting taxes on the short term, blowing out deficits on the short term? Because I think supply side solutions take longer to work their way into the system, where people would still want to buy our debt because they believe there's a resurgence of sorts to the American economy. That's my question to Steve, but I do want to get back to my answer to the other thing before too. But yeah.
So yes, and by the way, I don't buy this nonsense about a buyer strike on the U.S. dollar.
Hold on though. So if we rewound the tape 3 weeks where there was just a huge new spending initiatives coming and no real solutions to the economic problem, could you have seen a buyer strike on bonds and dollars?
Jim, what are you going to buy? There's three risk-free assets in the world. It's the U.S. dollar, or the U.S. Treasury bond, the German bond, and the Japanese government bond. Japan's demographics are decrepit, right? I mean, and they're 300% debt to GDP. Europe, my goodness, they need to schedule a meeting to form a committee to discuss the question of whether or not they're going to have a meeting to talk about their problems. And the German economic engine is broken, right? It was cheap Russian energy, a U.S. free security guarantee, and endless Chinese demand, and all of those are gone. So I get it. The United States does not have its fiscal house in order the way it's supposed to. Super. Where else are you going to go?
There's a fourth asset.
Asset in the world.
There is a fourth asset. Gold, Jerry.
Yeah, that's right. That's right. I mean, that's one element. But my comment always on that is, while gold is great, it's a soft yellow metal that we all agree has value. The U.S. dollar is bought by enough nukes to end the world 8 times.
I said the exact thing to Peter Schiff. And he goes, he's such a pompous ass sometimes. I just saw him again in New Orleans. He was like, oh, we're going to bomb someone for not buying our dollars? Yes, wars are fought for economic reasons all the time, dumbass.
We also have a Supreme Court defended unlimited right to taxation. I hate that right, but the government has never lost on a Supreme Court ruling on taxation. So they have a call on the assets of the richest country in the world. It is, the Treasury still is the best risk-free asset in the world. So look, it won't be that way if we don't get our house in order, but today, it's fine.
So, but back to what was his name again? Barricane, which by the way, he's a new contributor to the show, which thank you for joining us, Barricane. To his point, there is a slight risk that I worry about here, and I would like Steve to comment on it. I think demand side solutions are much quicker to implement. You drop corporate taxes, but supply side solutions, just taking the oil patch. It's going to take probably 6 to 18 months before we see any additional supply coming on the scene. So I think inflation could be ticking up in the next couple of months, and I think that could worry some people. Do you think there's any validity in that concern?
Yeah, I think you could get a pullback for that reason, especially once policy starts getting implemented at the beginning of the year. Because you're right. Like take the example of the auto company that's assembling in Mexico that you want to get to the United States, right? That doesn't happen overnight, right? You threaten them with a tariff. Okay, then they've got to abandon that facility, create new plans for a facility in the United States, and then build that facility in the United States, and then hire for it and get utilities to it, right? All of those things. And so, right, it's the difference between a sugar high kind of Keynesian stimulus, which, we saw it. We got free checks in the mail during the pandemic, right? They sent, well, I didn't get any, but they sent free money by mail, as opposed to a structural reform that allows for longer term economic growth. It's the fish and teaching someone how to fish. And so, yeah, I think that's possible.
Widge has a comment, and I'm not sure I agree with this statement, but I'll let you speak to it. Widge says, what are you going to buy? That's such a great case for inflation. I don't necessarily agree that a strong dollar necessarily is inflationary, but go ahead.
Yeah, no, I mean, I think what you're buying right now, or at least what we're buying right now, one is we like the short end of the yield curve if you're a fixed income person, that kind of 1 to 3 year part of the curve, right? If you look at the long end of the curve, you're not getting much extra yield as you are on the short end. We don't think that the 10-year yield is falling dramatically, so there's not a lot of price appreciation. You're owning that as a buffer in case things go bad, right? In case the economy rolls over. But that 1 to 3 year part of the curve, just moving out a little bit from cash, you can get a 4.25% yield, let's say, maybe a couple hundred basis points of price appreciation as the Fed cuts. And if we're right and the economy is solid for the next couple of years, you get a little bit of spread. And then in the equity, it's everything other than it's U.S. I think Europe is the big loser from the kind of tariff policy. I think they're in the most trouble. I think in the U.S. though, it's cyclicals and it's small caps first. I think dividend payers will have their day once everybody stops freaking out about inflation. In terms of the dollar being strong, look, I get it, but remember, we're a net importer. We're not a net exporter. So that's a big problem if you're a net exporter. We're not.
I want to address the second follow-up here, Jimmy, if I could. The strong dollar is deflationary, sure, but it's all of the dollar-priced assets. That's more, from a commodity perspective, a conversation about reduced demand, because when the dollar bumps up commodity prices globally, the demand for those naturally falls. So it isn't actually a one-to-one relationship that when the dollar is stronger, the dollar-priced assets increase in price. They historically don't. If we're talking about commodities, you obviously see over and over again the inverse relationship, specifically with hard commodities. Now include crude oil in that.
So,
but
just
go ahead, Jimmy.
No,
go ahead.
Which, by the way, Widge is not just some anonymous.
Yeah, Widge is.
We know he's very, very bright, probably an economist of some sort. He won't tell us who he is, but he's always giving great content to us. I was at the New Orleans Investment Conference last week, sat on a panel with George Gammon, and he started talking about the strong dollar being even like not just on the institutional corporate level, but even on the human people retail level, is attracting people to put their money in U.S. dollars and U.S. dollar denominated assets from around the world. And he currently lives in Medellin, Colombia. George does, which, by the way, sounds like the craziest ass thing I've ever heard.
Yeah, I mean,
it's spectacular there. I've been there a couple times.
Have you really?
Yeah, I've been to Medellin. I've been to Bogota. They're spectacular.
Because you know Brent Johnson, he was telling me that he went to visit George there, and he said he loved it. He said the same as you. So I just
Cali is great. Colombia is a great country. You just, as an American, and I don't look like an American when I'm there. People come up to me and speak Spanish to me all day long. I don't know what the hell they're saying, but you literally just want to make sure you take hotel taxis places, because there's cars that pick you up and then they take you out of the country and they leave you there if you don't go to an ATM and pull a bunch of money out. That's sort of the tourist crime.
It doesn't sound that different from New Orleans, by the way.
It doesn't sound like that from Chicago, to be honest, anymore. Go ahead. I'm sorry, Jimmy.
Was there a question in here, Jim?
What's that? I have no question in there. We got a little comment for 3 days. I barely even know what's going on, which, by the way, an offshoot of my 3 days in New Orleans. I came back. I've literally had stomach flu for 3 days. This is the first I've even felt like I could speak coherently. I don't know what the hell's going on in markets the last.
By the way, best food in the country is in New Orleans. It's not even close. It is the greatest food in the country. Yes.
So is there another city that's more closely associated with one specific type of food in our country? No, right?
No.
But after 3 days, you don't want to eat it for another couple months. Or am I alone in that?
I still want to eat it.
I don't want to eat it.
Well, I had to get
I'm not a giant fan of Cajun food, but also just looking at me, you would know it'd be like, yeah, guess my favorite foods. I don't even think you guys get. Yeah, it's not a problem. Another comment from the Barricade, which I really, again, guys, everybody's watching.
He's on fire today.
Just great stuff. And it's another great comment here. Barricade says, Such a great conversation. Thank you. Do you think the automobile industry could be a canary in the coal mine? I just read something today that Nissan says they have about 3 months of operating capital and the profits have tanked, and almost all the car manufacturers. Loving this conversation. Thanks, Barry.
Yeah. So I think the auto industry is kind of ground zero on a number of things right now, right? You've got the Chinese, first and foremost, that are aggressively going after the auto industry with their electric vehicles, kind of BYD. We don't see that as much in the United States because we've kind of resisted it. But in Europe, this is really putting pressure on their automakers. And there's a national security element to this, right? Once you have a self-driving car that has sensors all around the car and is operating on GPS, I mean, my goodness, the Cold War spies would have died for a tool like that, right? So you've got national security elements. You've got them kind of basically dumping the market with these cars because they're building them very inexpensively and selling them at very low price points, which is putting pressure on folks all over the world. And so, one of the things that could be counterintuitive about the Trump stuff and the tariff threats, at least for the U.S. automakers, is part of that is designed to make sure that China doesn't dump cars on the U.S. market and put our manufacturers out of business. And part of it is for the national security element of needing to have your own kind of domestic automobile industry, which you wouldn't have thought about as a strategic good, even 10 or 15 years ago. So whether it's tariffs, whether it's the U.S. China kind of intellectual capital and I don't think Cold War is the right word, but at least this kind of battle between these two countries, whether it's production facilities moving to the United States, I think the auto industry is in the crosshairs of this. And I think, as we were talking about Trump having to follow through and punishing someone in order for his tariff threats to be taken seriously, it wouldn't surprise me at all if it was the auto industry that saw that. And there's some company who would like to maybe move to the United States for assembly, but can't because of working capital issues that gets caught in the crosshair. So, I don't know that any better than anybody else, but I think there's a lot of cross currents that are all centering around automobiles right now. They're going to make it a very, very interesting place to watch, and can offer both upside and downside opportunities for investors.
So here, what I haven't touched automakers for a long, long time. And one thing that I thought was onerous regulations due to them trying to force feed EVs, them being the government. So I just met a guy. My restaurant owns 5 different car dealerships, and he said there's regulation of how many EVs he has to have on his lots for sale. There's literally, so if Trump really wants to help them, he probably should. And again, I love the environment too. But anytime you try to disrupt things, and we saw in Germany just back in December, they removed their $6,500 credit for buying an EV car. 37% was the demand decline. This is a product that people don't seem to want right now. Now, full autonomous driving might be a different thing, and I am totally mixed on that. The government has always wanted to surveil. The only thing that they lacked was the technology to do it on a grand scale. They now have the ability to do it on a grand scale through all the different ways we're being listened to. But anyway, so I think if those kind of things, so I don't know what I want as far as self-driving because it saves lives. My wife just got in a nasty accident a couple of months ago. Where do you fall on any of that?
I'm old school. I like to drive a car. I bought a car recently that was 6 years old because it had buttons, like actual buttons. I believe in feeling the road. I'm kind of old fashioned that way. But look, here's the thing on EVs, and I agree with you, right? The environment's important. I live 50 miles outside of New York City because I have trees and foxes and things in the backyard, and I like to play baseball with my kids, and I want there to be a nice environment. There's no universe where you look at an electric car and come to the conclusion that it's either environmentally or socially better than an internal combustion engine car. It's not, right? The amount of diesel that goes into mining the lithium, the cobalt, all the things you need for that battery, that's run primarily on slave labor. And I don't use that word lightly. There's 40 million slaves in the world right now. They're likely mining your lithium and your cobalt. The batteries are unrecyclable. The amount of rubber you go through because of the torque on the car. And then it's not a battery operated car. The battery holds the charge. It is powered by natural gas or coal depending on where your electric grid is hooked up. So mostly natural gas. So, you can like electric cars for a lot of reasons. You can like the technology behind them. You can like the acceleration. You can like the brand. You might want to give Elon Musk your money. All those are fair reasons, but we take this seriously, right? You want to understand the companies that you're owning and what impact they're having on the world. And that doesn't mean that we take other people's money and pursue our agenda, but we want to understand what are the risks around it. And it's very hard to get to a place where EVs are better for the environment. So I'm old school. Give me an old-fashioned car with buttons. My goodness, if it has a manual option, that's even better. And call it a day.
I love driving a manual transmission. It's one of my favorite things. We have a car with a giant engine and a really loud exhaust, and I have a lot of fun with that car. But I can't wait for self-driving cars so that I can just crack, a freaking, a Woodford Reserve in the backseat of the car.
You're not even going beer.
Let the car drive me home.
You know what, Bob? I get yelled at by my wife every time I drive the car. She's one of those ones that for the 20 years we've been together, every time I make a turn, she holds on to the seat like we're going to die. And sometimes she threatens me with the idea in retirement of going on long road trips. I would want a self-driving car for that, so that I don't have to get yelled at for hours at a time. That's
you
what
can both yell at the car.
Exactly. We'll just yell at the car. We could have your Woodford Reserve in the back.
So real quick, there's just a couple of things Barricade talked about, basically what you were saying about the EVs. Ford said they're not changing their strategy for EVs, no matter what the EPA does. But our regular and a friend of mine and Jim's, Tim, is getting the last question from the audience here, just got on. Any thoughts on housing?
Yeah. So I started my career covering housing. So this is like kind of near and dear to my heart. I don't think we're in for a major price correction. I know that it feels like we should be, given where prices are and where activity is. But if you think about it, we form about 1.5 million households a year in the United States. There's two adults coming together. Between the great financial crisis and COVID, over about 10 years, we only build about 900,000 homes a year. So that's a shortage of 6 million. And the millennials are about 15 million people bigger than the baby boomers. So you're short somewhere in the neighborhood of 10 to 15 million single family homes in the United States. And people don't make a decision to buy a single family home, or live in a single family home because of income. They don't do it because of a down payment amount. They do it because they have children, right? If you're in a multifamily apartment, you have 6 neighbors yelling at you when your kids are loud. You're probably in a city where the schools aren't great. And so you've got the bulk of the millennial generation still hasn't turned 30 yet. That happens between now and 2030, and that demand for single family homes are going to be there. So, I think what we're likely headed for here is more of an early 90s time correction, where you might see prices stay more or less stable for a period of time. Oh man, I cut myself. Stable for a period of time. And then the economy grows into that. Incomes grow into that. I think that's much more likely than some big decline in prices. I think where you could have a little bit of froth, though, is in multifamily, right? There's more multifamily construction going on right now than at any point in the history of the country. And it's based on the idea that the people that would normally move out to buy will be stuck renting. And I don't know that they will be, especially if rates come down a little bit. And so you may end up in an oversupply scenario on multifamily. So for me, I think generally home prices are going to stay stable. Things that are tied to that, like home improvement and some of those, I think the consumer's a little bit softer right now, but generally will be okay. Multifamily, I think we got a little bit of froth.
You have any closing thoughts, Steve?
You know what? Honestly, this is going to sound really simple and Pollyanna-ish. The chart moves up and to the right, Jim. It moves up and to the right. And anytime you forget that, you do it at your peril. Yes, it doesn't always move up and to the right. Yes, there can be periods where it's flatter. Yes, there's always things to be concerned about. But, to the points we were talking about earlier, you've got corporate earnings growing high single digits, likely to accelerate towards kind of low double digits. You've got a Fed that, for right or wrong, looks committed to cutting rates, to having a Fed funds rate with some kind of 3 handle on it. You've got tax cuts, deregulation likely coming. That's bullish.
What's not to like, right?
The number of times that you have earnings growth and rates falling are limited. And so I get it. Valuations are such, we're supposed to be rolled in the fetal position. I get it. But, if you start to look at the forgotten 493, not just the Magnificent Seven, if you start to look at those cyclicals, you start to look at those small caps, they're not overly expensive. And so, there's an old phrase, if you're going to go to hell, be in upper management. If we're not having a recession, then you got to start buying the stuff that's been unloved, like the small caps, like smaller banks, like the stuff you haven't wanted to touch, even REITs. And I think now's the time where it's kind of put up or shut up, and we're putting up. So
real quick, we have one comment so that
sure.
we're not just in our echo chamber here. I'll let you guys both address it. It's from Potential Sam. Electric cars use way less fossil fuels than internal combustion engines.
Yeah, the engine does.
Go.
So I'm sorry. I don't know why I'm cut myself here. The engine does, but you got to remember, you got to mine the materials to build that car. And those materials are cobalt, they're lithium, they're others, and those are built via strip mines with huge diesel output. And so diesel on a unit of emission per unit of emission is much, much dirtier than something like a kind of, the gas that you're going to buy, in at a gas station when you're using it industrially. And then you got to ship it, because all of that is being done in places like Africa and Asia. So yes, the engine is. Yes, it's also true that natural gas, which is generally powering it, is much cleaner than oil. All of those things are true on the vehicle itself in its life. When you look at the production of that vehicle and take all of that into account, then it becomes difficult. And then there's the human element, again, because those strip mines are not run ethically in a lot of cases.
So can I comment on this too? And first of all, I want to tell Potential Sam is one of my
I want to
favorite.
let you know real quick that it seems like the stream might have gone down on X, but go ahead, because it's still being recorded.
Because I love Potential Sam. I interact with him on a daily basis on Twitter, and I think 10% of his Twitter persona is just to argue with me on everything, which, by the way, I don't dislike. I like to have to prove my theses. So Sam, I love you. I think you're wrong 85% of the time. And I hope I tell you when you're right too, because there are those times you're right, but don't ever change. Can I wrap it up, Bobby?
Yeah. Looks like we lost our stream and we're done with the hour anyway. So happy Thanksgiving back to you, Tim, and the rest. Go ahead, Jimmy.
Happy Thanksgiving to all of you watching. You guys are the best. None of this would work without your support, your DMs, all your input for this too. Thank you so much. Remember Bobby and I's history? We were in legacy media for 20 years. We did not like being always pressured by overzealous producers and sponsors. We want to create our own thing. This is working great. He's Steve Cheverone of Federated Hermes. Tell them one more time where they can find you, and then they can let him go.
Yeah, you can find me on X, you can find me on LinkedIn, and you can find us at federatedhermes.com, which is the firm's website.
Awesome. Thank you for joining us.
Hey, guys, this was great. Thanks so much.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.